inflation continues to drop toward the central bank's target range, according to the latest numbers that were out this Tuesday. The new data shows the 12-month inflation rate is down to 3.1%. But some costs remain high, such as rent and eating out, perhaps explaining why this broadly positive economic news doesn't appear to be helping President Biden. Owen Fairclough explains.
For Joe Biden, the latest inflation numbers should be a gift as he tries to win a second presidential term on his economic record.
The recent Washington Post headline summed it up. Quote, this is the headline of the Post: falling inflation and rising growth give the U.S. the world's best recovery, The U.S. president addressing local government leaders on Monday, just hours before January's inflation data showed prices increasing by 3.1% on an annual basis. That's a drop on December and testament to how policymakers defied expectations by reducing inflation running at more than 9% in the summer of 2022 without derailing the economy. And it's a global trend, according to the International Monetary Fund.
The world economy is now poised for this soft landing we have been dreaming for.
Even so, polls suggest not all voters are feeling these positive economic indicators touted by Biden. While the cost of groceries has dropped, the cost of restaurant dining climbed more than 5% last month, and consumers are noticing. Fast food chain McDonald's admitted prices it raised by double digits over each of the past 2 years have been deterring lower-income families. And that persistent, if somewhat isolated inflation is one reason the US Federal Reserve isn't quite ready to start reducing the benchmark interest rate it ramped up to drive down inflation towards its 2% target. Owen Fairclough, CGTN, Washington.
And as you may expect, the consumer price data drove down U.S. markets on Tuesday. CGTN's John Terrett has the details from the floor of the New York Stock Exchange.
After the closing bell on Tuesday, we had some significant earnings from Airbnb, for example, the world's biggest travel agency, a revenue beat for them. And Lyft, the rival, certainly in America, to Uber, shares have been down 2% going in, but they were up 7% after their earnings per share was a beat. And in fact, there was talk of a surge at Lyft, which kind of dovetails nicely with what we heard from Uber last week. But the difference with Uber and Lyft, remember, is that Uber has Uber Eats, which Lyft does not. Also, Instacart cutting 7% of its workforce, affecting the shares in the immediate grey market here in New York. On the day itself, well, the worst day for the Dow for 2024 so far, after the CPI report came in and it was not what was expected. Wall Street looking for 2.9%, it got 3.1%. It pushes the chances of a rate cut, probably now back to June. And for that reason, the Dow was down 1.3%, 524 points, to stand at 38,200. And I think negative for the month of February. Nasdaq down 1.8%, and the S&P 500 down 1.3%. And on Wednesday, of course, is Valentine's Day, but we also get the earnings of another oil major in the United States, and that is Occidental Petroleum. John Barrett, CGTN, on the trading floor of the New York Stock Exchange.
Okay, now joining us to discuss the latest price index data and all things U.S. economy related, William Lee, Chief Economist at the Milken Institute. William, always a pleasure. Thanks for coming in. I kind of want to get right to the CPI information. Look, inflation's coming down, but let's put this in perspective. That prices are still going up. And it's certainly a frustration, if you will, to the Fed. And no matter what kind of spin Joe Biden tries to put on this, people are frustrated. What's your reaction to what happened, and then the market's reaction? Big sell-off.
Well, the market's reaction is pretty obvious. The market was completely disappointed because inflation has not continued to steadily decline the way it hoped. Because if you look at the month-to-month patterns, you'll notice that since November and December, we've been steadily rising in the terms of the monthly increases in inflation. The other thing that really matters is not Wall Street, but it's Main Street.
Sure.
And the man in the street, you and I, are seeing that our cost of living just isn't coming under control. President Biden has always been saying, well, the price of cars and the price of used cars has really come down because our supply chains have improved, but the cost of maintaining that car has gone up double digits. The price of insurance, the price of car maintenance, when we go to see our doctors, especially if we have to be hospitalized, then you really get hit by a huge health bill. So what we are seeing is that Main Street's perception of the economy is still that I don't make enough money to make ends meet. And they're blaming the president on that because it's the president's policies that really has contributed to a lot of the rise in inflation because of the huge consumer boost that was given to them by the stimulus checks. And so right now, I think people are still pretty angry that things are just not getting better.
And Willie, one thing that really stood out in this latest information, it's costing a lot of money to shelter yourself, whether it be buy a home and especially rent. And that's very difficult for people who are trying to live month to month.
That is a really good one. Sean, it's like the little kid in the back seat says, are we there yet? Are we there yet? Every month the CPI comes out, the president comes on the television and says, we know the rent inflation is going down because we see it in the data. But so far, as we pay our rent, it increases every year, and the monthly increases that we are seeing in the rental costs are really not coming down the way the president has promised.
And, CPI doesn't really take into account grocery prices because those are so volatile. But what about food prices? A couple things stood out in Owen's story. A lot of people, in middle class, lower middle class, will run in and grab fast food all the time. And double-digit price raises for McDonald's over the past both years. I mean, that's going to be a thing of the past if people really counted on that.
And Sean, every January, what we know is that the wages for fast food chains are pushed up by law. The minimum wages for fast food, especially in places like California, are hitting $21 an hour. And so every January, you're going to see these price increases. But, it's not just the fast food. It's dining out. Next Valentine's Day, when you go out for your Valentine's dinner, expect to see a big bill. And even when you go to the grocery store and you buy egg prices are high.
Yeah.
So the consumer's getting hit both at home and when you're going out.
One thing I hear constantly when I go to my local grocery, everybody is complaining about higher prices. I don't care what class you come from, it just hits you in the face every time you walk in there, and you just don't know how significant it's going to be.
And that's the thing that we have to keep in mind. When the Federal Reserve and when the President Biden talks about we're winning our war against inflation, inflation is coming down, that just means that the price increases are slowing down. Prices are still increasing. And to say that we're having price increases of 3% inflation, that means relative to the prices last year, on average, they're higher by 3%. They're not lower. And so you have to compare that to your wage increases. Or your wages increasing by a faster amount? And President Biden said today, real wages have gone up. But a lot of people are being laid off as well. So we have to keep in mind that job insecurity is paramount. It's not just how much you're making, it's whether you're going to keep your job or not.
And a couple of things that really jump out in terms of reality. Let's talk about where we move to as these prices continue to rise. We hope that the Fed is going to be aggressive and reducing interest rates, but right now we have no reason to believe that's going to happen. And secondly, as bad as it seems in the United States, the U.S. is still recovering much better than Europe and much better than most places around the world.
Oh, absolutely. And you can count on the fact that Chair Powell of the Federal Reserve has promised, he said, we're not going to lower our interest rates at all until we're convinced that we're well on our way back down to a low inflation path, which is toward 2%. And at the same time, as bad as we feel things are, if we were living in Europe, the slowdown there is really severe, and their inflation rate is even higher. So in that way, we should count our blessings that here in the United States, we're doing a lot better than many other places in the world.
Okay, William Lee, always a pleasure. Thank you so much, my friend. We'll see you again soon.
Thanks for having me.